Welcome back to the Air Crown Crypto channel. Wishing you a happy and healthy start to this nice little and late Friday morning over here from Helsinki, Finland. Major appreciation for all the well wishes, as I did miss the live stream this morning. Unfortunately, I had to sleep on in, get my chakras reset, but it was all for good because now I'm feeling a lot better, a lot more revitalized, and at a good time as well, because my good friend Mr. Fibbo Swani is going to be joining later tonight for a little bit of a podcast session, talking about his sort of insights into the macro, because he's one of the few guys that I really, I really like him in his style of analysis, and we have a lot of good crossover between each other, although we are looking at completely different metrics. So that is always valuable in my opinion, and then I'll do a long-term analysis over the weekend. But for right now, I want to focus on the most important and just easiest short-term and medium-term time frame stuff. So ultimately, I want to, as always, let you know that you can find the Crown Trading application here at app.crowntrading.net, and you can find just all the social links and whatnot in the link description below. Always have to say my piece, of course, with the Instagram. Please do not be enticed by very suave scammers on Instagram pretending to be me, asking to like trade your account, or doing the old like, give me 1 Bitcoin and I give you 2 Bitcoins bullshit. It's probably not true. Look, I haven't tried it myself, so I can't, fully endorse that, but it seems pretty sketch, actually. Sounds like a scam, in fact. Anyways, if you're interested in my actual Instagrams, it is in the link description below as well. And every once in a while I'll make a post there. I've been more, at least I've been more active there as of recent. Probably will do some more AMAs as well, because they're kind of fun and just a good way to keep engaged. But ultimately, I want to get on to the actual content of the day. So first and foremost, let's actually start off over here on the shorter term timeframes, as this is kind of where all the action's going on right now. And what do we have? So yesterday we did say this area right here, 43,350 or so, was the bottom side of the short-term time frame range, implying that, hey, if we do get an hourly closure below there, which we certainly did, we're looking at a move all the way back down somewhere around the 42,300-ish base right here, which is exactly what we got. We did say that a pullback was likely yesterday, but targets on that pullback were mediated again by this region right here. Just kind of follow up on that. Now we have a more short-term time frame range going on right here, to be quite frank, and it is quite simple as well. 43,000 bucks, or just below 43,000 bucks, is going to be the top side of it, versus the same area to the downside in this blue box territory at about 42,350, let's call it. Any sort of a closure below there, I would be marching targets back down somewhere around 41,000 to 41,500ish region, no less, something like this. And while I actually do think that Bitcoin very likely does pull on back up above that 43,000ish region, until that happens, I wouldn't necessarily be saying that this is most likely to happen, but ultimately I would be looking for just continuation of the general rally here back around 45, maybe 46,000 bucks. Wouldn't be asking for too much. But here's the thing, and here's what I really want to be focusing on today, just something relatively simple, because ultimately, like I said, I want to save the fun stuff for later tonight, and I want to make this video a little bit more digestible. So how do I want to do this? Do I want to start off over here? Do I want to start it off over here? Let's actually do it from this angle right here. So I want to once again present the case on this. I'm going to go into an extreme amount of more detail on this over the weekend, but I want to once again talk about this bottoming structure over here that we saw over the summer on the current macro low at $30,000, and this area that Bitcoin's working on right here as well. A lot of similarities between this price action, and of course, whenever it comes to the conversation of fractals, which this would be a fractal relationship, obviously, I always want to differentiate this one by essentially compiling a lot of the supporting factors that actually make it tangible, and giving a way to validate and invalidate a setup like this. Because my big concern with fractal talk is what I saw, what I typically see, which is people just like copy and pasting price action onto current price action, because it basically is like Hopium bullshit or Doomium bullshit as well. And realistically, there could be some merit to that, but unless you can actually validate a setup, it's a phantom as far as I'm concerned. It's just clout bullshit on social media. Okay, cool. So let's talk about this one right here, especially from the summer. You got this first major wick down on volume. That's this baby right here. That kind of sets in your range lows. This is essentially the validation or invalidation from that metric. And as long as we are getting daily closures above there, while I do think that, or obviously did retest it a few times, there is no, of course, official breaks. And that is a really good trading range to be reliant on, with the implication that, hey, we can kind of go over the same thing over here as well, which implies two things. Bitcoin, one, very likely retest this region several times. In fact, we've kind of already done this right here, obviously. But as long as there's no closures below that first wick low on the 4th of December, I do look at this relationship as still very, very relevant and likely to take some time as well. So we got this next wick down over here, even a little bit further south than that first initial drive down on the 20th of May, as you can see, or 19th of May, actually. Well, same thing over here, right? A little bit of a further wick to the downside, but no closures below that first initial wick low. Very, very important stuff. As the trading range is set, you get your highs right here at the top, right around the 55, that green 55 right there. Same thing right here, rejection at the 55 and back down to your lows. You beautiful bitch, you. Anyways, same thing after that, comes back down to lows, pops back up, puts in a little bit of an anemic rally towards the 21, which would be pretty much where we got to yesterday, actually. Very, very close. I mean, I'm referring to the yellow moving average right here, actually. And then kind of keeled back on over, retested the lows as you saw in the summer a few more times. And then actually got a closure very, very close to that initial wick low right here. But that was your bear trap, essentially. So if this all kind of plays out to fruition, we probably expect a bit more of a grind, could come down more short term, especially if we get that short term time frame range break, and then pop back up, maybe put another rally, something like this, like bore the ever-loving shit out of everyone, come back down, close somewhere right around there, and then boom, up. How would you validate the next move on this? That would be, of course, relevant for looking at this as, well, somewhat similar to before. Well, that would, of course, be with a daily closure at minimum back above about 45,500 to 46,000 bucks. That's like the next intermediary sort of confirmation on something like this. And then, of course, the full-on confirmation, which would make me gung-ho bullish to the fucking balls to the walls, would be back above our prior range highs on that rejection at the 55 right here, just like you saw right here as well at the $41,000 level. From months prior. Well, in this case, it'd be 52,000 bucks right here. That'd obviously be very, very good. Why is that? Well, because it would confirm several things. Not only would it confirm a full-on reversal, but it would confirm something that's actually I haven't really seen spoken about all that much right now. So let me pull up a fresh chart for this one. Let me see. Is this? Yeah, this one's good right here. All right, this will do the trick. Anyways, you will notice that, and you've probably seen a lot of talk about this, perhaps, that there is a head and shoulders on the charts right now, which there is some validity to that. I could make some comments about the volume analysis on it, but I've come to realize that that's less important than the structure itself. And where would your neckline be? Your neckline would obviously be right here, right around about 41,000 bucks on a daily closing basis, right? Okay, beautiful. Well, in the event that you do have a head and shoulders formation, you actually can provide a, of course, measured move, an implied target on it upon validation, which in this case would be pointed all the way down towards, 15,000 bucks. I think that's rather unlikely, to be quite honest with you, but that would be on the board. That would be worth consideration. Obviously, you need to be aware of these sorts of things. At the same time, there is an inverse relationship to be made with this as well. And what's very important about, a bearish formation like this or any formation like this is that you can actually apply a failure target on a failure implied target on as well, which would be confirmed by trading back and closing back above what would be your right shoulder right here. In this case, that would imply this price action, of which would have a measure move all the way up just shy of about 80,000 bucks actually. So I do think that it's relevant. It's just not like relevant right now. But if that does happen, then yeah, I do think that obviously $52,000 doesn't just provide a technical breakdown region, aka getting back above there would be a reversal in this case, but it also have an implied target to new all-time highs in this sense as well. I'm just trying to think of another example where you've seen something like this. Yeah, you saw right here actually. In fact, on this head and shoulders, in fact, right here, and I believe, yeah, we saw something like this. Okay, yeah, the measure move on this one did not play out to the downside. Yep, exactly, did not. And then did it play out to the upside before this little starter step right here? Yeah, it did. So beautiful. Anyways, I think that's enough for that. Oh, and also the most obvious one would be this humongous one right here, which eerily similar to what we're doing right now as well, right? And same thing. So I know a lot of people over the summer were looking at this as a head and shoulders. I was a little bit more critical of that, especially after June. That was no longer like a legitimate possibility. And guess what? That's pretty much exactly where Bitcoin actually put in its current all-time high, just around 69 to 70,000 bucks. Close enough in that case. So quite good right there, and does have a bit of a history of playing those out. And we can extrapolate this a few more pieces, obviously. If we go back into here, into the underlying market dynamics, or actually before we go into the underlying market dynamics, I do want to call out, of course, the fear and greed index once again, because we see a fractal within the sentiment indicator as well, as you can compare this last month and a half where we've been kind of oscillating within the extreme fearful zone, similar to what we saw over the summer right here, which took about 2.5 months in the very fearful zone, obviously. And right now, if we were to make a bit of a relationship to it, we'd be kind of right about here in late June compared to what we're doing right now on this current iteration of it, which doesn't need to be exact timing. You know, it's just has to kind of rhyme with it. And yeah, that's still, you know, a bit relevant right here. So I thought that that was rather interesting. On top of that, I should also denote, of course, that the funding rates very similarly positioned here as well. You know, we do see, of course, the first extreme lows on that major drop in May, of course, over the summer. That was like your bottom, or sorry, not your bottom on it, but your lowest point on it. And then, of course, it kind of trended up after that, while mostly staying consistently negative or around zero. Well, same thing over here from December 4th, right? We got that first initial major spike, and then recently, you know, it's been more negative than not, to be fair, but more or less trending back up towards zero, which anything below 0.01% is suggestive that shorts are being a little bit more on the aggressive side compared to longs. And here's the thing, when you match that up with open interest right here, we do see that, you know, open interest is actually a little bit relatively high compared to where Bitcoin is at right now after a move like that. So what does that imply? It implies that at minimum, we're probably going to be, you know, spending a bit of time going sideways here, which I do believe would actually be healthy for Bitcoin. Now, it's, you know, the more that Bitcoin goes sideways above about 40,000 bucks, the more and more that this will naturally be bullish. But, you know, that's going to probably take a few weeks to maybe in a month and a half. So if you see Bitcoin still kind of holding that region in like another month, then I'd say that the probabilities of this one turning back up and completing the full-on reversal above those major regions, initiating targets, technically speaking, to maybe 80,000 plus, are going to be a lot more relevant. So what would invalidate this whole damn thing as a setup? Well, pretty damn simple. If we're running off of this relationship over here, daily closure below about 41,000 bucks, it's kaput, it's gone, and well, kiss your fucking bull market, or kiss your bull market hopium, gone for a very long time after that as well. And you're probably looking at big bad moves down, probably somewhere around 35, maybe even low 30s after that. Fill the old gapple that we see on CME from way back on over in July. Anyways, we're 11 minutes into this video. I don't want to make this more. Yeah, I don't want to make this any more long than it needs to be. I do want to still kind of rest my voice a little bit here, but basically, you know, if we're going back into the shorter term time frames, I think it's rather simple, or at least simplistic right here. You know, wait, what the fuck? Oh yeah, had that one right there. Hourly back above about 42,950, or let's just say 43,000 bucks. I'm looking for this to be kind of like your next sort of short-term, medium-term local low before working Bitcoin back up into the, you know, shallow 45s, maybe even 46. But ultimately, I do think that Bitcoin is very likely going to fail to rally somewhere right around there. Comes back down to the current lows, probably scares the ever-living shit out of everyone, probably takes a long time and bores the ever-living shit out of everyone as well. And then all good in the hood, assuming that, you know, lows do hold, of course. So it's going to be probably, you know, boring another month, and that's probably going to be good for Bitcoin if you happen to give a fuck about, or if you are, you know, of course, bullish. If you're bearish, well, you want continuation sooner rather than later. But, you know, looking at momentum also is over here, I don't think that Bitcoin necessarily has the momentum to do it like at this exact moment. This is a pretty staunch downtrend right there that hasn't really had any major reprieve. So, you know, just for example, daily stochastic momentum will be remaining to the upside as long as above 40,750. Buy daily just crossed the upside the other day as well, and will be remaining up as long as we're above 41,350. And throughout this whole time, admittedly, whilst having like a $30,000 correction, which is fucking insane, we have seen the 5-day and the weekly stochastic momentum go for full resets here. So the 5 days coming all the way down, as is the weekly, and of course CME is going to be closing later today as well. You know, that's now even below 50,000 bucks, which will naturally be even lower when we open up into next week as well. So basically, the more that Bitcoin just kind of holds this region without actually breaking down, the more and more naturally, at minimum, Bitcoin should get, you know, a decent-ish bounce, and potentially even the major reversal, of which we outlined conditions for that. Should also denote here and follow up on this one from yesterday, caretaker MACD showing that, well, we do have, or we potentially might have, a continuation of this cross to the upside. And we also do have 1, 2, 3 drives of histogram bullish divergence, you know, for what it's worth. But with the 20 simple kind of angling down very aggressively like that, that's not a strong signature right there, to be fair. But hey, you know, it will be remaining with upside momentum as long as Bitcoin's closing dailies above 42,150. All right, cool. I think that is going to take care of that today. Basically a long way of saying you're probably looking at something like this. Blah, 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 blah. And then maybe that at best, or blip, or that at worst. Just understand where those validations are. I actually think the short-term time frame ranges are the easiest one right here. And personally speaking, I do think Bitcoin's going to do, something like this, where you come down, maybe test this once, maybe twice, get back above there, boom, and one more short-term rally try to the upside, and then probably comes back down, to be quite honest with you. So hopefully that was in some way helpful. I'll be signing off now. Should probably also let you know about the good old Bybit show as well. I haven't done that in a long time. Yeah, Bybit's a great place to go get wrecked on. So sign up in the link description below. They're offering you like $3,000 or $4,000 free dollars in order to sign up. But of course, and in a more sincere tone, the reason why they're offering that is because they know that they're very likely going to make more money off you than you off of them. But we do obviously need exchanges. That is probably one of the better ones to go to if you are enticed by the super high leverage exchanges, and it will have the better liquidity. But yeah, basically what I'm trying to say is, look, unless you're already an experienced trader, it's probably not very wise to be taking advantage of links like that, even with the deposit bonus, because, well, if you don't already have like some sort of a working formula or working strategy that you have verified via backtesting on a testnet account or a paper trade account, it's probably not going to work out. So be careful. And with that said, I'm going to be signing off. Take care and see you hopefully very soon.